Hello, everyone, and welcome to another edition of the Forex Market Update. And I hope you had a good trading week last week. And what we're looking at is the daily chart of the euro versus the US dollar. And I was listening to CNBC last week, and I heard someone speaking about parity, and that the dollar is heading for parity, definitely. Now, when I hear stuff like that on the mainstream media, that normally indicates that this market could be headed for a turnaround soon. Now, just because I say it's headed for a turnaround soon, you should then go out and buy this market, because our trading philosophy is to follow the trend. So currently, the trend is down in the euro versus US dollar. So I would recommend that you look for selling opportunities in this pair. Last week we spoke about the fact that the market would test this bottom that was made at the 110.97, because we had a pivot point support area. And what happened, and this is a good good investing and learning opportunity, was that the market at no point gave you a signal on the daily chart that it was going to respect that low and you got a bullish candle. On the contrary, the market just pierced through the area of support and kept going lower and lower. So that's why it's important for when you are trading, especially when you're trading your setups, let the market confirm whatever you are thinking before you go out and trade that particular setup. Looking at the monthly pivot point on this, we see that the monthly pivot point was at 109.44, and now the market is even below the 109.44 level. So are we headed lower? Could be in the euro US dollar, but there's no sign of a bottom yet. Well, except the sign that I heard on CNBC when the person said it's heading for parity. That's normally the sign. Whenever the mainstream starts making predictions, that's normally when the market is close to a bottom. I don't recall hearing anyone saying that the market was heading for parity up in May of last year, when the euro was at $1.40. $1.40. Okay, looking at the 15-minute chart to see how this played out. What we saw was a break. We saw a break of the support area. This is the support area here by this line. The market broke the support area, came up, tested the support area, and technical analysis rules state that when you have broken support, sometimes, not all the time, sometimes the market will come up, test that support. So the support then turns resistance. So if this 111 area was support, the market broke the support, it then turned resistance. You got a huge sell signal, and the market collapsed further and further ever since then. So when you are day trading or you are trading the smaller time frames, these are the things you can look out for. Taking a look at the Japanese yen, we spoke about the triangle that had occurred in the yen. And we spoke about the fact that the market had broke out of this triangle. The market broke out of this triangle here, retested the area of, it's the same phenomena we saw in the euro. Market broke out of the resistance area, came back down, tested the resistance, which turned support and is heading upwards. Another way to look at the Japanese yen was you could have redrawn the triangle to say this was a prevailing triangle here. You could have even redrawn this to say this, okay, this is a prevailing triangle. So the market even broke above this triangle, and we got a close above this resistance level near the 120 level. Actually, let me get the exact price. It is 120.47, and the market closed at 120.78. So we did close above these resistance areas. So what you may see is the market come back down, test this resistance, turn that will turn support, and head back up. I mean, the market could continue crashing, coming back down. That's why you have to make the market confirm what we're doing here. Okay, so critical resistance in the Japanese yen is up at the 122 level, and support is at 120 and also 118, with longer term support at this 116 level. 116, because what could happen is that the market could come up near the 122 level, test the 122 level, and head back down, and we could enter a channel situation. Well, the channel will be between 122 and 116. That's what could happen. Obviously, the market will have to, the price action would have to confirm that particular scenario. Taking a look at the Canadian dollar, we are in a channel situation in the Canadian dollar, and I spoke about the fact last week that this area near the 124 could act as support. And what happened was that the market came down near this 124 level and bounced. It bounced up and has resumed its upward thrust, and that's for the Canadian dollar. Now resistance is at, just draw resistance. You have, let's look on that on the daily chart. This could be your resistance. You see like a triangle forming. The market is exactly at resistance now, and you would have to look to see if the market is able to break above this resistance line. Longer term resistance is at the 128 level, which was the high, which was an all-time high for the year on the Canadian dollar, CAD USD. And for those traders, it's the smart money, the momentum with this market is on the buy side. So you'll be better off looking for buy signals as opposed to sell signals in this market here. Okay, looking at the other market of interest was the Australian dollar. We see, looking at the 4-hour charts, we see that the market came up to resistance here. Let me just draw the resistance level. Now this is what you call this is a perfect example of what you call a false break, and that's why it can be so dangerous going against the flow of the market. This market is clearly in a downtrend and a down move. Now, buying breakouts in the opposite direction of where the market is going can be dangerous. So we see that on the 4-hour chart, the market closed above the resistance area by this candle pattern, and then promptly it was trying to hold. You see the market was finding support here, but the momentum just wasn't in that direction, and the market collapsed to the downside. And that's why it can be dangerous buying breakouts in the opposite direction of where the trend is going. Okay, so that is the technical market update for this week. I hope you have a very good trading week, and I hope you are able to learn something from this market update. This is Beyond, and have a good day. Thank you.